Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's 708th installment, baby. Yeah. 708 videos directed at you to help you become a better analyst. And if that makes you better at analyzing markets, or if these videos make you better at analyzing markets, I assure you it'll make you better at trading markets at some point. So learn the analysis from us and then apply it towards trading. Traders, futures trading, as you know, is risky and can cause substantial financial loss. Please do not trade these markets if you do not have risk capital to lose. For you traders out there that do ride the ponies, you know what I'm talking about. These things have been all over the place lately, traders. What do we have on the board? The Dow Jones Transportation Average and the 65% rule. Traders, this video is being filmed on Wednesday night for Trading Thursday. That would be March 17th, 2011. Happy St. Patty's Day to those who celebrate. All right, traders, I'm going to be very quick in this video. Remember, I told you I will just keep you updated on the 65% rule. As we know, that 65% rule involves an apex or a pennant, and you break that down into 4 equal quadrants, and if you break out somewhere in the 65% area, it's usually a false breakout. And then you go the other way. I know that's a horrible illustration, but I'm going to show you on a chart in just a moment what I'm talking about. The last 3 videos that I've brought to you have been about the 65% rule, and nothing has changed yet, traders. We've come off a little bit in the markets, but the chart's exactly the same, and I'll show that to you in just a moment. Before we go into the charts, traders, remember this. We are trying to start a grassroots movement to get speculators out of the crude oil. I've asked many of you to write letters to me if you agree and or disagree with this. The ones who agree, I want you to get behind me, and hopefully we can get a movement going to stop speculators, to get them out of the crude. Now, for you traders that have written letters, thank you so much for your support. I would like to address some of the OMNI and traders out there that have been writing basically, I guess, comments, you call them, on my YouTube videos and or emails to me directly. Some of you, I think, just have this wrong. I think you're misinterpreting what my idea is. Traders, my idea is this. If you are an end user in crude oil, i.e. if you take the crude and put it in trucks so that you can send your trucking fleet out. So if you are in the transportation business, if you are in any business at all that actually takes the crude oil or gasoline and uses it, and I'm not talking about individuals because we are not corporations and we're not end users. We go to the pump, we fill up our cars. If you are a corporation that is an end user that actually uses the crude and can prove you are taking delivery, those people should be allowed to come to market. They should be allowed to buy and sell at will as long as they can prove they need the delivery. What we do not need in crude oil is the speculators that are in there. Traders, every country on the planet and just about every city in those countries, and then all the companies inside of those cities that are in those countries across this planet need crude oil. They line up 24 hours a day. They stand in line. Thank you, sir. May I have more crude? There is no liquidity problem in the crude oil market. Take other commodity markets, traders, and I absolutely recognize you could never have them function properly without having speculators. Speculators create liquidity. Liquidity is a good thing. It's what the markets need so that they can be free-floating and they can be open outcry, if you will, type markets. So I am for speculating. I've lived as a speculator my whole life. So I am not against speculators. I am against the fact that speculators are allowed to go into a market like crude oil, which is detrimental if the price goes up to every economy on the planet. In fact, it's absolutely disastrous if the price of crude goes too high. Now, why do we allow speculators to go into crude and just put on bets and force it higher? Those are the people I'm trying to force out. Again, if you have any reason to use the crude and can prove it, you should be allowed access to that market. Hedgers are there, end users are there, trucking companies are there, you name it. If you're using the crude, you should have access. If you are putting on a bet and that bet's to force the market higher, and the only reason why you're in crude is to make money. You should not be allowed in that market, and that is my point. I hope that helps to clear it up for some of you traders. Listen, I've been around the crude market my entire grown-up life since I'm 18 years old. It's got plenty of liquidity. There is no excuse that we need speculators in there to create the liquidity. So, if you want to get behind me, I'm going to write to senators, to congressmen. I'm writing to everybody. I'm sending video clips to as many as I can. I'm starting a movement. I want speculators out of crude. I cannot stand here and watch other countries where they're poor to begin with and the price of crude reaches a level that no one can even afford gas in the country. That happens to countries all around this world when bettors or speculators get into crude and jack up the price. Are you with me out there, OMNIacs, or what, baby? Let's start this movement. Let's get the speculators out of the crude markets. All right, enough of that. Please write to me. I hope that helps to, I guess, alleviate some of the confusion that some of you have had about my viewpoints on crude. All right, traders, the Dow Jones Transportation Average and the 65% rule, what does it mean? Follow me to the board and let's go look at some charts.
The United States leader, Dow Transports.
Well, thank you for that introduction there, young analyst. Traders, the Dow Jones Transportation Average, this is deemed the leader of U.S. indices. What I have mentioned to you in the past 3 videos, is that we have a technique that we use here at the OMNI Trading Academy. It is a technique I have been using literally over 27 years now, traders. The technique is what you're looking at here. When you recognize you have a pennant, before you get towards the end of the life of that pennant, which would be here, you break it into 4 equal quadrants. 25%, 50%, 75%, finally at the end it's 100%. So it's got a 4-quarter life, or 4 quadrants in the life of the apex. Apex is, or the pennant is here in red, which comes to an apex. So we break that down into 4 equal quadrants, and what we expect is this. Right around the 65% area, or somewhere between the 50 and 75% mark in this quadrant, we expect a false breakout. If in fact the market dips lower than the bottom of the line and goes back up into it, it generally will take off and rally through the top of that pennant. And we have seen this work so often that we dubbed it the 65% false breakout rule. Traders, you have no idea how many times I've spotted a pennant in the last 27 years, put my 4 lines on it, saw a false breakout, and was able to capitalize on the upside. It also works the other way, just so that you know. If you had a pennant like this and you had a false breakout up here, it would generally end up breaking down this way. In this instance, right now we're looking at a false breakdown, so we should break out to the upside. Now here's the thing. We will know within the next 2 trading days if we're back into the pennant and we go higher, because once we go past the 75% mark, this becomes null and void. So what we're looking for is to get back into the pennant as we are right now. By the way, the transportation average only spent 1 day below the pennant and got right back into it. So if we stay inside the pennant and move higher on Thursday, we have a buy situation for Friday and next week. If in fact we start to break down lower, then this whole thing has failed and we will look for much more on the downside. Traders, pull your own charts, look for the pennant, look for the 65% false breakout, qualify that for yourselves. There are examples in many, many charts. So, traders, you've seen the chart. There is my technical argument for the 65% rule. We will know within a day or 2 if we can abandon ship on that rule or if in fact it does work and it carries us higher. Traders, OMNI is prepared to buy or sell on Thursday. It just depends on the setup. Now that we've had such volatility like this, OMNI's arrow is in both directions. It'll buy, it'll sell, it'll trade in either direction. So you members out there, you OMNIacs, be prepared to get flash updates tomorrow. If we hit certain levels tonight or tomorrow, you will get notified. We will jump into a trade. Please pay attention. All right, traders, I'm going to get out of here quickly. Please fill out your applications for OMNI Camp. We're holding a 4-day training session live here in Las Vegas with me, 4 full days and nights in May. If you'd like to come to that OMNI Camp and train with me personally, come to my site, livewithoscar.com. fill out the OmniCamp application, and I'll call you as we get closer to May. Traders, thank you so much for watching this video. Thank you so much for coming to my site. Remember, jump into my free trading rooms and do not trade alone. A stop is your best friend. And one of the best things you can do to keep your emotions out of trading during the day is to say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.